You've got some money set aside. Maybe it's 40,000, maybe it's a little less or a little more. And you've watched that sit in a savings account earning you almost nothing. A few dollars a year, while the bank lends that same money back out at 8%, 9 or even 10 in some cases. You're not the bank, you're the bank's best customer. And the thing nobody says out loud is this: you don't have to stay on that side of the desk. You don't need to be rich to switch sides. You don't need 180,000. Hey, I'm Mario Pinar, the co-founder of Ritsel Notes, and my wife Lorena and I have been investing in real estate since 2006. Today I want to show you the door that most people never got shown. Let me tell you where that 180,000 number even comes from, because it scares a lot of people off before they start. A while back we looked at a real note, a loan on a house in Indianapolis. A family had bought that home and was paying it off every month, right on time for years. The balance on that loan was about 180,000. When most people hear that, they think, well, that isn't for me. I don't have 180,000 sitting around. That's a house. That's somebody else's game. But here's what the bank knows that you don't. When you put money in a savings account, you're handing the bank your cash so they can be the lender, and they pay you almost nothing for the privilege. Your savings account isn't growing your money, it's funding someone else's loan. You're already in this business, you're just on the losing side of it. So let's go back to the 180,000 loan. Here's the part that changes everything. You don't have to buy the whole loan. Think of the note like a pizza. The whole pie might be 180,000, but you can buy a single slice. That slice might be 40,000. Same house behind it, same family making the same payment. You just own a piece of it instead of the whole thing. And you might be thinking, a slice, is that even a real thing? It is. It has a name. It's called a partial. And it's one of the most normal things in this whole business. While you hold that slice, you're the lender on it. The payment that you used to go to the bank every month, part of it now comes to you. That's the whole idea behind becoming the bank. You stop being the customer and you start being the one who gets paid. I'm using round numbers to make the idea clear. Every real note is different, and you'd always looked at your own situation with your own advisor. But the shape of it is real. A loan you thought was out of reach become a slice you can actually hold. I didn't start there. For years I owned rentals, tenants, repairs, the late night phone calls. I restructured that ate my time, and a syndication that turned out to be a scam that cost me. I learned the hard way that owning the building isn't the only way to own the income. When I found notes, the slice idea is the thing that hit me. I didn't have to wait until I had all the fortune. I can own a loan or a piece of it and collect the payment without the toilets or the tenants. So if that lands for you, here's how people actually start. And the first way costs you nothing. You can just learn it. We run the free 5-day challenge called Become the Bank. One short lesson a day, no money down and no obligation. You can come in alongside us, where we do the work and you hold a secured position. That's once a conversation, because the right fit depends on you. Or when you're ready, you can own the note yourself, the whole thing, or a slice like we talked about, with us guiding you the whole way. But you don't have to decide any of that today. You just have to stop letting your money sit on the wrong side of the desk. Start with the free challenge, 5 days, 1 lesson a day, and you'll understand this better than most people ever will. The link is right here. Go become the bank. And if you want to watch the real note go from offer all the way to the first payment, just go and watch this next video up here.